Benton.
It's Friday.
Yoo-hoo! Back by popular demand. Not that popular yet that anyone's logged on, but here we go. We've got a couple of people dialing on. Hello, team. Hello, crew.
Welcome.
Welcome back. Welcome back.
It seems that Friday called us and said, "Listen, boys, you better get your bums back over to this time slot because it's in minimal demand by a lot of people." If that makes sense.
James is happy. Graham's happy. Right, happy Friday, boys. There we go. Couple of happy subscribers, regulars coming back. So that's awesome. Yep, Allison likes the Friday wine. Well, it worked out. It ended up being that I was trying to get a little bit more time with the family, but we ended up only being able to have Wednesday family dinner night on Wednesdays. So we've changed back. But there you go. There's Ben. How are you, Ben? Ben's a new member at Positive. Welcome, Ben. Great to see you, mate. And welcome the rest who are joining us, some of the regulars. You're in my ears at work, don't tell. All right, Lauren, we'll keep it on the down low.
Well, that's interesting because Jason and I were actually commenting. It's like, if we jump on at about 4:30, we're going to see who's hitting the beers a little bit early. So we didn't think about people with us in their ears at work, but either which way, I think that it's going to benefit the economy. So keep on listening, Lauren.
Keep on going. Exactly. Mark, happy Friday to you, mate. Well, welcome, everyone. Great to have the regulars back and those who are new and the likes. Welcome to our Wealth, Wine and Wisdom, our Friday show that started at Friday, went to Wednesday, back to Friday. Andy and I, when COVID arrived on our shores in the world, we decided we would do a live debrief on the week because things were happening so quickly last year. And Andy's world of banking, financial planning, and business structuring and business advisory, my world of property investing, property structuring, wealth creation, matching them together to support our clients, our tribe, our crew, when the changing times come along. And it's stuck there. We've enjoyed it. I think most people who've attended have enjoyed it as well. There's Graham. He's got the fire going. There we go. Some beer and bullshit. I love it. That's awesome. And Damien's dropping by. Good day, Damien. Good to see you, mate. There you go. But listen, we've enjoyed supporting you guys supporting us and having a bit of fun as well. We like to share what we know, and if it's useful, then great. And if you have a bit of fun on Friday afternoon, get the weekend off to a decent start. That's nice too. Another benefit for Andy and I, we get to hang out and chew the fat before and after as well. So that's a nice way to go. Andy's on a bit of a cleanse. He's got some fake wine there, but you know what? It's the healthy wine. He's on the health kick. I've got the red wine going on, a nice one from, I don't know where it is. Somebody sent it to me. Everyone thinks I'm a bit of a wine drinker when I do this show, but it's nice to have a wine once or twice a week. But I'm not very big on the drink, but on Fridays it's kind of nice. But welcome along, gang. The show consists of us debriefing the week. What's in the news? We have a rough structure to what we get up to. It might seem we're rambling on, but we feel like we have a bit of a direction for the show, which is what's in the news. We talk about that. It's usually the way we kick off. What's been in the news this week? Our opinion, interpretation, feedback on that sort of thing. We believe there's things that we wouldn't mind teaching you, maybe things you should know about property, about finance, about the share market, about the economy, about business. We share a little bit of that. And then if you guys are up for it, and this is the shout out right now, if you've got questions that you want us to talk about later on in the show, we usually go for about 40 minutes, an hour. Give us a shout out in the chat right now as you roll. What questions would you like us to talk about in the show today? Maybe what's going on in the week or where you're at. It's there. So Allison's got some question already about the Tesla cars. Interesting. Yeah. We'll see what goes on.
I might even chime in on that one, mate, straight away, because I've been watching this, and as you know,
What are your thoughts, Andy? What are your thoughts?
Well, I've got a bit of experience with Tesla cars. A good friend of both of ours, Albert Hendricks, and I, allegedly drove one from Los Angeles down the way through to Vegas. I say allegedly drove them because most of the time we didn't really have our hand on the steering wheel. But here's the thing that I learned is that driverless cars, a bit of an oxymoron. They still need the drivers in there, and there is a bit of a Darwin Award. And I don't want to discredit those that may have lost their lives in the car. But here's the thing, is what man against machine, when Albert and I were going along the highway, Route 66 or whatever it was, cars flying everywhere, the Teslas driving along, and you take your hands off the wheel and it drives. And so we would have a conversation, much the same as this, or you're over there, Jace, with you yapping away like that, and be sitting in the driver's seat and having a good old chuff time. And then all of a sudden the Tesla car goes, put your hands back on the wheel, right? It makes a little bang sound and it makes you put your hands back on the wheel. Now, if you don't, it cuts off the auto drive and slams on or doesn't slam on the brakes. It puts on the brakes and slows you down. Now, 3 strikes and you're out, Jace. 3 strikes of taking your hands off the wheel for too long, the car actually then disables the autopilot mode. So this is my next state, because we thought, well, that's not right, is it, Mr. Musk? We want to be able to drive all the way from LA to Vegas without touching the steering wheel. That was our journey. So man against machine, we manufactured. We thought, how can we trick the car to think that we've got our hands on the wheel? So we got a little
allegedly
water bottle. A little water bottle, which had about that much water left in the bottle, and we squeezed it in so it was kind of wedged in the wheel. So as you'd go over bumps, the water would slowly touch the wheel, and it would make you feel like you were, it would make the wheel and the car think that there was somebody driving it. Now, that was all well and good until a truck came out of nowhere, which we saw coming, and nearly took us out in the middle of Route 66. So what we realized from that is that you should probably keep your hands on the wheel of a car if you're going 100 kilometers in any direction. And so my note there is, drive the car still, maybe take the hands off the wheel for a short period of time, but don't wedge a water bottle in there and expect it to get you to the country club. So I don't think it's going to have a massive effect on the shares. I think that the vision is significantly bigger than that. And there needs to be a bit of responsibility put back on us lunatics for doing quite crazy things.
Yeah. Well, there you go. Andy Fenton hacked the Tesla with Albert Hendricks. So it'd be the classic pair as well, for sure. So there you go. If anyone knows Albert, you know Andy, but you don't know Albert. Anyway, mate, I agree. The company's way bigger than that. And even if it does have a short-term effect, it won't have a long-term effect. Sometimes those things, while very unfortunate, if you're in the market for the shares, maybe sometimes an okay time to buy some shares at a better price. What we do know, Andy, it's not so long ago, which was probably 4 to 6 months ago now, the Tesla company made it into the S&P 100. Correct me if I'm wrong. 500. This is your world, and so literally they made it to a place where they're pretty well fully funded now. Irrelevant of their share price, it won't affect the company really in any fundamental way. They're fully funded as you make it into a certain level in the world of public listed companies. Yeah, the ability for cash and funding is insane, and they made it. They got to that level, and now that business is pretty robust for the future. So I think Allison I think it'll be okay. He's a bit of a madman. Madman or a genius, you never know with Elon, and I think that's the kind of magic of Elon. People back people like that, and the company maybe sometimes and the products become sometimes secondary, but like
Yes.
Yeah, it is. It's like an Apple or an Amazon or a Tesla. What are the other types of businesses and companies out there that follow those personalities, which are really interesting when it comes to that stuff? So,
it's the new age Colonel Sanders, isn't it? Really, the 7 herbs and spices, but they can literally do almost anything wrong at any point in time, and the world just loved them for it. For those of you who don't know, that was the bulletproof glass demo for Tesla.
Yeah, it's like, you brought the wrong glass, you guys. Get another one. Anyway. But anyway, let's circle around, Andy. Maybe do you want to give it a bit of a kickoff? What's in the news in the world of finance, the economy, share market? What do you got for us this week, Andy Fenton?
Mate, well, I think this one is going to be on everybody's radar right now, and I'd never seen so many prolific comments, and I couldn't coin the article that actually had the dead quote from the RBA, but effectively, RBA grows optimistic on recovery, and you and I both know, Jace, we always take what the RBA says with a grain of salt. But here's some of the data that's running in here. Let me just zoom in here a little bit.
That'd be handy.
Yeah, is good reading through here. So the RBA has upgraded its projections for the Australian economy recovery as unusual. Unemployment continues to fall sharply ahead of next week's big budget. So the RBA left rates on hold. That was pretty expected. With its outlook of Australian GDP growth from 4.75% in 2021, they expect it to be still 3.5% through 2022, with a pickup of business and investment and household spending expected to support much of the economy and much of the recovery. So it was the commissioner who came out and basically advised that that they believe that up until rates will be pretty much on hold, and I can't quote it because I cannot find the source, but I know I saw it. So allegedly, Jason said until 2024, and I went poof. I was shocked, but I just didn't snap it on my phone at the time. So anybody find that would be interested in being able to put the article up. So here's the other thing. With Treasurer Josh Frydenberg signalling that the government will not be taking any sharp pivots towards austerity. Isn't that a perfect sentence? In the up-and-coming budget on the 11th of May, that the jobless rate will need, and here's an interesting part, the jobless rate will need to have a 4 in front of it. I didn't know that the Treasurer could count to 4, but we finally know that he figured out how to hit 4th gear. And obviously that's going to be a real, I mean, to me, that's a massive indicator of where his head's at in coming into the budget. So for those of you who don't know, and I'm getting into a bit of what you should know, at the moment is the budget's actually on next week. Next week's Wine and Wisdom will be a big budget edition. We'll be talking all things budget. Jason and I will be putting our glasses on in front of the television, writing notes and FaceTiming each other, grunting, groaning, celebrating, clapping, saying what a load of bullshit and how can we take advantage of that? And you'll hear all of the calamity that comes from that. But mate, that I think is incredible. So the RBA, big call. Allegedly, we can perceivably see rates on hold until 2024. And the Treasurer coming out and saying that there won't be any sharp pivots towards austerity measures, but there will be austerity at some point in time. And they want to see the jobless rate to have a 4 in front of it. That says to me that and it makes sense, doesn't it, Jace? Like they have got a checkbook which they can leave open for one more election. Look, if I was sitting there, I'd probably go, well, to hell with the future, because it's a 4-year type of thing. You know, we're every 4 years, we're going to be probably voted out by our own party next year, and then probably voted out by Australia 3 years after. I'd be going, well, let's go out with a bang, put the printing press on, get a bit more money out in that system, and do what the Americans have been doing and just fire it on out there, just get it churning. And to me, this is a really, really interesting sign which could be extraordinarily good for markets, shares, could be extraordinarily good for property, and maybe very, very good for business. So next week is going to be a really, really interesting week, my friend.
I think you're dead right, mate. And to be honest, the austerity word is probably a bit of an understatement. You and I know behind the scenes, in our world, the government is busily undoing things that were put in place from the time of APRA. Financial planning's getting a bit more scrutiny, as in, let the financial planners do a great job instead of beating them up. From ASIC and those guys all the time, APRA and the brokers and lending, they're saying, hey, everybody, lend people money, get this economy going. So that word austerity, I think a bit of an understatement, to be honest. Behind the scenes, it's like, listen, like, open the taps, gang. We need the country to have money, and we need people to have jobs, and certainly plays very nicely into where we sit. That's for sure. Yeah.
And look, I think, with the word austerity in the future, they will say we will not bring in a COVID tax, but allegedly, I reckon this word might be on the table.
Yeah. It's not a tax at the levy.
It's not a tax. I told you we wouldn't tax. It's a tax. But yeah, mate, I think it's very interesting. And as you said, in the finance world, from the Royal Banking Commission, advisors, brokers, they've gone, we don't like you guys because you're destroying the economy. And when they fucked the economy, then they came back and they've gone, oh, actually, we need you guys. So we're going to see them repealing a lot, potentially repealing a lot of what they put in place. So look out, those advisors, brokers out there, and look out, people, because I think that, with any luck and with any common sense, we might actually see things become more affordable in that space and more readily available, so that the world can keep on spinning the way that it needs to.
Yeah. You and I both know we're pretty passionate about that one, and certainly. So, there's a few things here. We might answer this a little bit later, David, about Ethereum and crypto. It's very popular at the moment. We can chat about what that means and our thoughts. Elon Musk into Dogecoin. He was in and out of Bitcoin and other things. It's interesting, really interesting, putting that stuff on the radar. And interest rates on hold till 2024. We talked about this ages ago, Andy. And certainly I see no reason, from a lending point of view, for banks to raise their interest rates. Their margin's still there. Their spread's still there. The banks are still making good money, even though interest rates are low. The banks aren't. The banks are going to make decent profit. Don't you worry about that. And part of it is the government making sure that the banks are taken care of. Bernard Salt, we saw him at Mastermind just recently. He predicted a big financial boom. Yep. So we're right into that. So there you go. And Jeremy's enjoying the show. I know Jeremy does a little bit in the Bitcoin and the other coin space as well. And there's a little bit of interest and excitement in that sort of space. But we'll have a bit of yarn about those ones as we roll, Andy. But what do you got? What do you got here?
Well, mate, funnily enough, and we've had this up while you've been chatting through those, but Coinbase. This is just something, a matter of interest that's been in the news. I've been following it pretty closely. Coinbase, to my knowledge, is the first listed exchange provider for cryptocurrencies. And it was listed, and we spoke about it a few Wine and Wisdoms ago. It was listed over in the US. I've been watching it, and the red line here on the right hand side, so going over there, that's actually its journey from its IPO and where it's going at the moment. So it's been in the news because it says it plunges to an all-time low. Well, the bloody thing's only just started, so. Any low is going to be an all-time low. Let's face it, and this is why I love journalists. I really do
love the media. Yeah. Let's grab a few headlines.
At an all-time low. What was the previous low? Well, it hasn't had one. Why is that? Because it's only been in the market for a week and a half, but it's at an all-time low, Jace. And but it's one that I've got a bit of a curious interest in. And so they've made a few correlations here, which I think is quite smart. And again, very interesting. So my perception on this is that I've looked at Coinbase going major distributor globally of or facilitation platform to get in and out of cryptocurrencies. So I was watching it kind of going, all right, I'm going to watch this because I reckon it's going to die. But when it bounces, it might be a really interesting symbol of where the crypto market is about to go. And that's why I'm watching it, because I'm going, okay, look, some of the cryptocurrency to the best of times is volatile and social. And what I mean by that is pretty much what Jeremy just put on here earlier on. He's gone, it's going to go up when Elon Musk says X, right? Now that's what I call a social investment, because it's, Elon's there. Yep. Okay. Bang, it goes up. So it can be very media driven, and because these things are quite fatical at points in time. So for those of you who love it, I'm not discrediting it. I'm actually crediting it, but I'm just calling it as a different medium at the moment. But the thing that I found interesting here is they've actually put it in the IPO side of the equation. So you can see here, Coinbase tracking, which is in the red, based off the average performance of IPOs in the US. So there's been a lot of IPOs, and they've got different types of IPOs that are actually in the US. They're SPACs, as they're called. So there's slightly different type of an IPO. A sort of a non-publicly listed IPO, which is really interesting way of raising money. And so if you look at the trends of them, really, really similar. And so, 2020, a boom year in market terms after COVID. But now a lot of these listed IPOs, that includes our mates at Airbnb and a few others, have really been shaken up. And that goes to show a little bit of the confidence, the forward-looking confidence in the US economy at the moment. So they're looking at the top end of town, and potentially getting out. But the other thing that when you overlay this with the average, and there's a whole lot of different metrics, and I didn't have time to overlay it, but if you have a look at the average sort of crypto chart at the moment, actually mirrors reasonably closely to this as well. So could it be that it's following the standard IPO journey? Possibly. What does that present to us? Actually presents massive amount of opportunity in that IPO space, because you might be able to pick up. Because for those of you who don't know, an IPO is basically where a company lists, right? And if we call this the listing price, right, immediately when it lists, it either goes one way or the other. A lot of the time they go flying up, and then they price rationalize down to here. And this might be $1, this might be 10, and it might settle at 5 as an example, right? So those people who get in nice and early can sometimes really, who are part of the initial public offering, who have shares as it goes private, can make an absolute squillion. But when you have these things continue to fall and they start to come down to their sort of listing price, then there's two ways it can go. If it's driven by market sentiment and it's a great stock, but it just is getting pushed down with the market and the indexes, and there are other things in favor, then it can provide some really unique possibilities. And so that's what I wanted to illustrate here. I did want to talk to crypto because I think it's an interesting space, and we'll talk more about it in the future. But also from the IPO space and the SPAC space, I think that there's going to be a lot of interesting maneuvering here, and maybe even some further M&A activity up in the sort of the listed space. So one to watch, mate, and it could be a really interesting journey.
Yeah. Well, listen, those instruments of the future are certainly well on our radar, and unless you're living under a rock, that this stuff's coming, and it's certainly not going away. It's here to stay. Bitcoin, Ethereum, different blockchain technologies, whatever those things are. We've talked about it before. There's some disruption coming our way when it comes to banking, finance, property in this space. It's not here yet, but these are what I would call early warning systems of what is to come. And if you're a smart investor, then you have a look at these things early and really study them as an interest, because then they flow into our other worlds of property and finance and other asset classes, in good and not so good ways. So pretty interesting to keep an eye on, that's for sure, mate. Big fan of that. Yeah. So over to where I am in the news for a lot of property investors right now. Let's see if I can whack myself up there. Oh, here we go. Boom. Some interesting things happening right now. House prices in the capital cities, in 6 capital cities, hit record highs. Again, the media likes to find a headline, Andy, that that people pay attention to. All-time low in Coinbase or whatever it was. All-time highs in the capital cities. But it's an interesting time in the world of real estate, and a lot of people are wondering, is there a bubble? Is there, is this going to last? Whatever it is, and certainly my feedback from this stuff in the news will be, coupled with low interest rates for at least another 2, if not 3 years minimum, very low interest rates, very favourable terms of trade and lending from the government and other bits and pieces, there's certainly a little bit more room to play when it comes to the world of property and the property run. And but I sort of did a little live this morning. I do a morning wealth coffee chat, and Andy, you and I have chatted about this quite often. Don't get caught up in the hype, whether it's people are talking about a bubble or a boom or whatever it is. At the end of the day, it is your long-term strategy that is the thing that matters most. But if you're getting value right now, you're getting uplift right now, well, that's great. That's fantastic. And Jeff makes that a really good point, which certainly I've had a bit of a yarn about many times before. Some point, I reckon 23, 24, I reckon travel will be back, and new immigrants to Australia, people who are emigrating to Australia, will be in demand, in significant demand. And gang, there's going to be, I believe there's going to be even more pressure on the real estate market in the future, because you guys have seen me talk about the supply chain in Australia right now is absolutely decimated. I talked about that a few times before. Jeff sort of saying, a 4-bed semi North Bondi went for 6.1 million in 3 weeks ago. And these numbers are mad, right? So it's just
like clarification on what a 4-bed semi is there, Jeff. I'm just not quite sure what you're talking about there, mate.
What could you rent that for, Andy? You could probably rent it for maybe $1,000 a week. You're probably getting 0.5% rental yield, like a return on it. It's insane. So, there's a lot of money around, and the Financial Review reporting that return of investors to push new home loans to record highs. Well, we've been at all-time record lows, record low for investor activity in the last year and the year before for 20 years. So, sure, a new home loan record. It doesn't take much to go from a 20-year low to a new record. But, there you go, as you go. But certainly investors are returning back to the marketplace. And Graham asked this question before about hanging out with ANZ. They don't seem to know anything about regarding responsible lending laws. The actual people who you talk to in the bank, Graham, won't know. That's not their jobs or their roles. But what we do get to see is the changes, Graham, in the terms and conditions or the qualification process of the lenders. And that happens a long way from the branches It happens a long way from the lending manager, and the lending manager just knows when it's done. But for myself and Andy, we get to talk to people further up the chain or down the chain or whatever you want to call it, people who are creating these policies or repealing these policies. And certainly what we've seen, Graham, I see it certainly firsthand for me, and I know Andy's been rubbing shoulders with some interesting people in the last couple of months in this space as well, that the lending for homeowners, business owners and investors is massively on the agenda for the government and repealing a lot of those things. The serviceability calculations have improved no end. New types of loans and products have been coming out, and certainly attractive 90% lending and interest-only lending is back on the menu for a lot of people when it comes to the ability to borrow also. So keep an eye on that as you go forward, but really I see no reason in the next 2 years for property prices to slow down. Is certainly as more people join the market as we roll along, because here's something that many of us should know, which is pretty interesting, because we call this like a yield compression, or a reverse indicator. The ability for people to borrow because the interest rates have gone down has improved for anybody on average 22% in the last 2 years. Okay, so if you look at this, the improvement is 22%, gang. So what I do know, normal purchasing, investing, buying property behavior, and Andy would see this in markets as well, you don't shop within your budget, do you? If you could afford to borrow 22% more, you go, nah, I'll just only borrow 400,000, not 500,000, right? Because if you can afford to borrow 500,000, well, you go and borrow 500,000 and you pay probably 520,000 for a house, and you borrow another 20 grand from your mum and dad because that's what you did. Okay, so it's a fait accompli, and this is the stuff that myself and Sam saw years ago. I was calling this out in mid 2019 when we saw interest rates dropping, and also at the same time things like this happening: building rates falling off a cliff, Melbourne apartment rates falling off a cliff. Construction approval rates falling off a cliff. Some of these construction rates and approval rates are down like 60% across the country. And in some locations, inner city, not inner city, but inner ring Brisbane example is down 92%, fallen 92% in medium density construction in 4 years. And so, not only the lowest interest rates around for a while, our ability to borrow has increased, and the government's not going to mess with that for a few years. We get some more people back in population. We have less properties available for construction. And I showed it last week, Andy. Not last week, but last time we caught up for Wine and Wisdom. I think it was this one here. Let me just quickly grab it. The number of listings, the number of existing properties being listed on the market across the country is down 60% as well. So you think, no, that's cool. If construction's not happening, that's all right. Plenty of people are selling. Well, no, they're not. They're not selling. Why would they sell? Because their property prices, every city's going up in value. Their rents have gone up, and you know what? Half of them have had a bloody mortgage pause for the last 18 months. They've got more cash than they've ever had. Their properties have increased in value more than they have in the last 5 years. Why would anyone sell right now unless they have to, or unless they're ill-informed? So it's a double-edged sword right now when it comes to the property market. Existing properties aren't being put on the market to sell, and new properties aren't available for sale because construction has plummeted, but the number of people available in the market, because interest rates have gone down so far and lending's better than it was two or 3 years ago. Now we've created this vacuum of demand, or this pressure of demand. There's no supply. So it's an interesting thing. Rental yields are still far behind right now because the interest rates are so low, but we will see that change. My call is you'll start to see end of 21, early 22, you'll see rents starting to rise pretty significantly as well. You'll probably see the value rises slow a little, but you'll see the rents starting to kick up then, because, it's been 2 years or 3 years since anyone's had a rent rise, and everyone's starting to get jobs again and the economy's okay, and the landlords will say, well, it's time to put the rents back up. So, it's an interesting time. And consumer confidence at nearly, not the greatest line, but nearly at the highest rate since before the GFC. This was the peak of
an all-time high since 2009 by the looks of it, Jason.
There you go. Hey, we can write our own headlines, Andy. An all-time high in the last 10 years. There you go. Westpac and Melbourne Institute. Anyway, so it as we say continuously and endlessly, interesting times out there, Andy. And here's the other one that I wanted to say, things you should know. It's the average increase in the amount of money as a 20% deposit. I'll shift myself out of here, actually. I'll go over there. I don't think you can shift, Andy, but that's okay. I think we can do this, actually. Let's try that.
Yeah, you can shift. Yep. There we go.
I put you there. The average increase since 2019, if you look across those numbers, you average them out, plus or minus a few, other than South Australia, it's getting up there, average, around about 20% across a bunch of those places. So it doesn't take Einstein to work out that if the ability to borrow 20% more equals the amount more deposit for first home buyers and other people is 20% more now, the mathematics doesn't look that complicated, really, why we're ending up with house prices in the 6 capital cities back at all-time records and all-time highs. So, that's what's out there for me. All-time highs, I don't know about all-time highs, Jeff, but certainly we can make up our own stats here and say all-time high for the last decades, according to that that chart a minute ago. But in all seriousness, it is kind of almost, Andy. You know what I'm feeling? Like, I get the feeling right now. I don't know if you're feeling the same here, but it's kind of a bit like, 12 months ago we were bloody dodging bullets and, trying to sort of, what's the next surprise? And now it's like we're everywhere we turn, it's like, reasonably good news. And you're like, well, hang on, come on, gang. I'm a bit of the old, let's take advantage while we can, but let's not overindulge in the good times when it comes to this sort of stuff. Because this is what happens often, Andy, I think, where I was talking about this morning, property investing or business or whatever. It doesn't take long. I think that's a good part about human nature. It doesn't take long for us to forget about the tough times that were 6 months or 12 months or 18 months ago when we're having a good time. Especially if you're new to the market, if you're new to the share market, or you're new to the property market, or you're new to business, and things are going well. You started 6 months ago, because you just didn't care about COVID. You give it a shot and it went well for you, whatever it might be. It's these times where you're sort of like, all right, take a little bit off the table, make sure you plan for later, and think about these sorts of things also, because this won't last forever. This exciting times won't last forever, and it's not normal. It's a fun time. It's a good time, but it's not a good time all the time. And I think that's one of the lessons I think many people should really sort of know, that when the good times are here, take a little bit off the table as you roll along. But yeah, well, and that's it for me. What's in the news? Away you go. And maybe we could sort of chat a little bit about this world of Bitcoin and some of that tech stuff, Andy. What are your thoughts in there? Let's say people are thinking about this stuff. Like in my world, things that I don't know very much about, but I want to know something about as in investment as a principle for me. I love the idea of working out and playing with new ideas and things. So what I do is I make sure if I'm going to invest in things that I don't know about, but other people do, the money that I put in there, I'm more than happy to lose.
Yep.
And for a lesson. And if I don't lose it and I make some money, then that's good, and I can reinvest the more I know. What are your thoughts in this sort of space? Because it's pretty popular at the moment. And I've had a few chats with people about, mate, I should take 100 grand of my equity and go hard on whatever coin. And I'm like, do you know anything about it? What do you know? What do you know about it? What's your skill set? What's your level? What's your certainty? And what would you say?
Mate, it's interesting, and I'm still a novice really in the area of coins and NFTs and things of that nature. What I do know is your top 10 from the next year and a half will absolutely blister. And you almost can't afford not to be in it to a degree, but you've got to be willing to go in and experiment and be. And understand that to a degree it's a gamble unless you're willing to put in the education behind it. But what I've started to realize through going through social circles, and so I play the idiot when I talk about things like this, or I play the student, in that until you become an expert, don't have an opinion, just ask questions. And through doing that approach, and it really is, it's very interesting, because when people think that you're a complete novice in the space, the amount of information they throw at you is completely unfiltered. You get their perception, you get distortion of fact, and you get a whole lot in between. So, mate, what I'm taking from it at the moment, and what I was going to chat with you about actually afterwards, I'm calling it the 25K Club. Because it's sort of where I'm sitting and going, well, what is an amount that I'm happy to put into this in order to play with a high probability of making some significant returns. And when I say significant, I'm talking extraordinary types of returns with a high probability. But also there is a possibility of being able to do the dough completely, at least over a short time, because the market can accelerate and crash reasonably quickly. My perception is that where we're sitting, and I'm not going to mention where we're investing at the moment for risk of somebody suing us if they go in. But my perception is that I think that people like you and I, people who want to have a bit of risk and are willing to go on a really wild ride, then you need to be looking at this space. That blockchain is the future of the way that property is going to operate, settlements are going to operate, governments are going to run the countries, governments are going to run Medicares. Like that foundational technology is the way that the world is going to operate in the future. I've got no shadow of a doubt about that. The technology, I'm a big buy-in, and I believe in absolutely. The cryptos of the world have got a long way before they mature. But here's the thing, like the I don't know whether you call it Dogecoin or Doggy Coin, like people call it different stuff anyway, but DOGE coin has been in the press. And you and I spoke about this about 3 weeks ago, and I put a little bit in 3 weeks ago, and I think it shot up from 5 cents to wherever it is now. And I forget on day to day, mate. It's the volatility is extreme, but just through the media. And what I was watching was I'm very much watching the media, and I think Jeremy mentioned something here earlier. Let me just have a look here. DOG. So it's now at 81 cents. right? So bought in at 5, now 81 cents, absolute cracking return. Now, that was done off a bit of knowledge behind it, but I was literally trading media, right? I was literally trading media behind the coin. I'm looking at it and going, okay, what are the signs that I know are affecting coin at the moment? And the signs that are affecting coin is media, because there are a lot of people out there who absolutely know nothing about these things that are just buying into them based on what Musk says, based off what I've just forgotten his name, but I've been listening to him a lot, and I've forgotten his name. He's one of the world's largest crypto holders and ex-hedge fund manager, probably the best source of information. So there is technology differences between, the various different coins, and it's probably too much to get into without doing a special, which maybe we'll do, Jace. Maybe we'll get a couple of crypto specialists in and really run a strong
I've got a guy. Yeah, I've got a guy that I know really well, and he's got a substantial crypto holding. I speak to him all the time. So yeah, I think that'd be fun. That'd be fun. It's it's about learning as well, like you say. It's great to be a student in this stuff as well, because it's fascinating, I reckon.
Right. One thing that I do know is, for these people who love trading, is that this has hallmarks of old futures markets. And when you talk about trading momentum, like if you get in early and you've got a few covered strategies, so got a bit of a strategy behind you, you can gamble in this market and make a fairly substantial play, because the trend across the board is positive. Now that, as positive real estate, when the trend is positive, it's a hell of a lot easier to make it. And so my perception is, the 25K club is an idea that I'm putting forward to sort of taking that from a number of people and going into a bit of a portfolio of money that you're happy that if it dives, it might take a little while to recover. I don't think that it will, but coming into a lot of these coins, watching the technology unfold, and then being able to get the upkick, because if you've at least got a little bit of a toe in the water with some of these things, you're not going to be the person that's sitting there in 10 years' time from now going, I remember when Fenton coin was 1 cent and Jason and Andy launched it and they were talking about it on Wine and Wisdom, and now it's $455,000 a coin. And if I'd only put $1 in at that point in time, I'd be a multi-millionaire. If you don't want to have those stories, you've got to be willing to play in this game a little bit. And it can be a fun game, but it's a volatile game, that's for sure.
Yeah. Well, yeah, and it's an interesting one. Bob asked about, will it crash with stock market and stuff like that? And, that's what I, really, as you mature your investment world, I think that, thinking through your own strategy of how you manage the risk that you want to take is something that's like super important, right? Because, if we just quickly have a look at, something like this, and if I chuck us in there, so let's see if this works. So, if you have a look at, when it comes to volatility, and, this is just a very rudimentary chart, but, if you go back to February 5 to February 20 right now, and, when we talk about like volatility, you have a look at February 07, where the S&P was just killing it, right? Just knocking it out of the park in comparison to the average property, dwelling price index, and you're thinking, oh shit, property's rubbish. Let's get into, the share market, whatever that might be. And the S&P 200, it's a spread of different companies and stuff like that. But, individual companies, Andy, could be way more volatile, way more up and way more down at this point. But, and so too could properties. They you can see it always, I love this stuff where you go, all right, well, let's have a look. Well, fuck, they in one way, shape or form for a 10-year period rolling, they always end up around about the same time. And it's the idea of like, you and I have talked about this before. One of property's most attractive values is it allows leverage and simple leverage against the asset. Your money goes further. But, one of the attractive mechanisms of the share market is its ability to grow like so fast it's not funny. Property doesn't do that. Like your property's values don't go, from 5 cents to 70 cents in fucking 3 weeks' time. You know what I mean? Like that doesn't happen. And so, but, if you went to NAB tomorrow and said, mate, I want to buy, 400 grand worth of Bitcoin, but I've only got 20 grand to put in, they'd laugh you out of the office, right? They wouldn't give you any leverage, so you couldn't get, the asset. So it's an interesting one. It's an interesting one as you roll. I'll tell you a funny story, Jeff. And this is a true story. I bought $25,000 worth of Bitcoin 4.5 years ago, and I bought it at $2,500 a Bitcoin. And what someone said I should do is I should put my Bitcoin into this trading platform where I could sell it, put in calls, create income out of the Bitcoin. Andy, what's it called? I'm having a mental blank when you do that on the share market. Strategy. Yeah. You do. You put your thing up and you can sell covered shorts. Covered calls. So you put your crypto up and there was covered calls on it. And anyway, the company that was doing the covered calls for me absolutely got poleaxed. They actually got taken to court by the American ASIC. What's the American ASIC, Andy? The SEC. SEC. Because they were operating a financial instrument, a financial company without a license. So anyway, they got poleaxed, and I didn't get my Bitcoin back. So if I just bought Bitcoin and kept it, I think I was sort of doing the math the other day. It'd be over $1 million. So anyway, it's a true story. There you go.
But that's the danger, isn't it? It's like, so you traded it, and we talk about this a lot. What are you? Is it a job? Are you an investor? Is that what you do? Are you an investor, or are you in the business of investing and trading?
Yes.
And the difference is massive, and that's cost you probably $1 billion or thereabouts, or pretty freaking close to it, mate.
A lot of no.
Is trying to trade something, and my perspective on this stuff, and again, still junior. I reckon my knowledge is more than many, but nowhere near as where I'd call myself anywhere near a master or an expert on it. But for me, it's buy, it's hold, and just spread it, understand what you're getting into, hold it, and you're going to have some dogs, right? It might even have a dog-eat coin, right, for a bad pun. But you might have some dogs in your portfolio. You might have Fenton coin in your portfolio and really smash it over time. But it's one of these things. It's, if you watch it, mate, it's a crazy ass ride. And if you try and trade it, well, I'm sure that people do it well, but like you said,
different kettle of fish. Yeah. And it's against my nature. I'm not a trader. I'm not a trader. I just got busted by my wife. I didn't tell her that we lost all our Bitcoin because I put it in a stupid trading platform. I got in trouble. Sorry, my love. I'll come down and cook dinner in a minute. So there you go. No, it's actually pizza night.
Mate, I think we've all had those experiences. I remember when I was using Fiverr a little while ago, or many years ago, I was using Fiverr, and I accidentally got a refund via Bitcoin because Fiverr was actually trading it or allowing you to buy stuff with it. And so I had this Bitcoin. I didn't even know what it was back then. I'm like, what's this junk? And I lost it, and then somebody spoke to me about it, and they've gone, oh, that thing went up miles. And I went and, grabbed whatever it was, my 10 grand out, which was a $500 refund that got to 10 grand. And I grabbed my 10 grand. I'm like, oh my God, but I didn't research it. I just went, oh my God, $500 into 10 grand. That's awesome. It'd be millions now. Like it's just, right. I think there's many of us who have got those stories of how we've sort of fallen over it at some point and now suffer a bit of that envy of what might have been.
Yeah, it's a lesson. It's an interesting one. Alison sort of said, it's a business lesson of teaching. You're right. And, it's actually a lesson I've learned twice now. The first couple of properties that I ever bought, I turned them into positive cash flow properties by on-selling them under a rent-to-buy arrangement. So I literally tripled my income from them, but I sold the capital growth future of them. So I'm killing it for cash flow. But within a very short period of time, those properties doubled in value. And for about $30,000 of positive cash flow, I gave away about $500,000 worth of capital growth. And it was like, oh, okay, that's a dumb idea. Let's talk about making sure that I don't make that mistake again. And thanks, Alison, for reminding me that I've actually made that mistake twice now about chasing cash flow over value. It's certainly one that I'll remember to teach. So there you go. Yes, indeed. Well, I think there's a fair bit of interest in that, Andy, and like you and I like to do, we like to learn things. So let's we'll track down one or two of the people we know, gang, and we'll bring them on the show. What we're looking to do with Wealth, Wine and Wisdom is, we're going to shift it to 4 o'clock, we think, or 4:30. We're just going to work out what the calendar looks like on a Friday. And then we really want to bring on a few more guests, maybe 1 to 2 guests a month as well, and really beef up the show and really get right into it, because we're pretty keen to make it exciting, and we love the support from you guys, and we really want to make it take it to the next level when it comes to the info, the ideas, and the debrief of what's going on in our industries in the world. So hopefully that makes sense. So anyway, it's probably a great way to sort of maybe put a pin in it for the show for the week. Thanks, Calvin. Valuable lessons indeed. That's what I say to many people. Listen, I've invested in the lessons. Why don't you get them for a very low price? You don't have to lose millions to get the lessons. Just learn them off me and Andy. So that's the way.
Let's make new mistakes together. Together. That's the theme. Let's piss off the old ones. Let's share the old mistakes, which are called lessons, because it hurts less when you call them lessons. And let's step forward and make new mistakes together, because at least if we're going to learn something, we may as well learn something new rather than something that we already know.
Bloody right.
That's what we're going to do. So for those of you who are listening, we do actually have some structure coming forward for the next couple of weeks. So at least the next 2 weeks, we're going to give you the budget summary from Jason, my perspective, at what we see. And I'm pretty excited about it based off what I've been reading so far. So could be very, very interesting. And for investors, if what I think is coming in this budget, mate, strap yourselves in. Like we're on a bit of a rocket ship ride, which is going to be very, very scary for some. But let's wait and see. And look at here's my tip: watch markets. Watch the Australian S&P to 200. The Australian ASX 200 or the All Ordinaries. Watch it just on the lead up to the budget night. I reckon you're going to see a bit of a bump because I reckon there's positive sentiment around that, and I reckon it's going to kick the budget. And if it comes out what I think it's going to look like, it'll probably kick it a little bit further along. Just what I think. Don't go and bet your house on it, but I'm just putting it out there because it could be very, very interesting. By the way, previous ones, it's done the exact opposite. It's plummeted out because ScoMo or Freudenberg have said something stupid before the budget, and it's absolutely dove, but then kicked back up really aggressively. And we picked it last year to an absolute T. So budget next week, we'll give you the full wrap. So for business owners, investors out there, this is for you. It will be a gold session. Might run longer if Jason and I are anything alike, which we know that we are. It could be at 7 o'clock from a 4 o'clock. But so budget, then we're going to go into tax, because it's tax planning time for investors, for property investors, for business owners, and we'll get one of our quite wild and knowledgeable friends to come in. Paul, I haven't locked him in yet, but we'll either have him the week after next or the week after that. So that is definitely booked in to come, and we're going to start locking more away. Let us know what you like more. We might listen, we might not, but what we're thinking at the moment is that we'll probably put it at the 4 o'clock, but we'll do Q&A at the end. And what that'll allow to happen is that if you can't get on because you're diligently working and you don't have us in your ears at work, then you can come on at the end of the show, coming into that 5 o'clock or 5:30 if we started at 4:30. You can listen to the question time, and we'll give you a recap of what we talked about, so that then if you want to watch back, we'll replay it live on our streams as well. So this is all about you guys. It's all about serving you guys. We have a lot of fun doing it. So please let us know the things that you'd love us to cover. We'll get the experts. We'll find the people. We'll bring them to you, and we'll bring them to you on a Friday, and we'll try and have a bit of fun with it, because finance is fun, and it's something that we should all be getting into and enjoying the journey, so that we don't look backwards and go, oh, if only. We'll look forward, and we'll make new mistakes together. What about that, Jason?
Good, right, mate. There's the price of my Bitcoin. Not only the Bitcoin now. I just did the math. I didn't want to. Anyway, let's look forward, Andy. I'm with you. Let's go forward, team. All right. Mr. Fenton, Andy Fenton, as always, an absolute pleasure to hang out with you and have a bit of a yarn. And mate, great to hang out and chat. Hey, Candace, big shout out to Candace. Drew out some equity and bought an investment property that settled today. Oh, there's a cheers to Candace. Good on you, buddy. Well done. Fantastic. High fives, tight tens. Good job. That's great, Candace. Well done. Moving forward. I always like the idea that your money keeps moving, and you get to learn more about how to make your money work harder for you rather than you working for money. That's what Andy and I love the idea of doing. Ultimately, that's really the point, gang. It's really the point. Understanding that if you take some time to learn about money and make it work for you rather than you have to work for it, your life will be anywhere between a bit and a whole lot better. As you move forward in life, and it's something that we'd love to share. So well done, Candace, and thanks everyone for joining us today. We've had fun and enjoyed hanging out. So that's it. We're done and dusted. Wealth, Wine, and Wisdom, an hour show. We always say we might talk for 30 or 40 minutes, and it's an hour later, and we could probably talk for another hour if we didn't wind it up. But mate, awesome to hang out with you, and everybody. Thanks again, and have a great weekend. And like we said, join us again next week. We're going to up the ante on the show. Awesome.
And it's good night from me. And it's a good night from him.
Bye, everyone.